Hello and welcome to Crypto Weeklies. In this video, we are going to analyze the recent rally by stacks, conduct some regression based analysis, and estimated bull run target. None of the content is financial advice. So, over the last couple of weeks, especially over the last 24 hours, stacks has rallied by about 16%. Over the last 7 days, up by about 14%. Over the last 30 days, up by 60%. Market cap at about $1.4 billion. Circulating supply, almost 83% of the max supply is in circulation, so that again above 60%, the effect of new tokens on the market cap versus price gap growth gets minimized. So by that I mean, over the last 1 year, if you toggle between this price view and the market cap view, you would essentially see one and the same chart. But if you go long back enough, you would see some divergence between the price growth and the market cap growth. Over here, the market cap did grow by a lot, whereas the price grew and then kind of flattened out. Slightly different view of the same chart. That means, again, when most of the tokens are released of the max supply, the impact of the new releases of the token from 1.52 billion to 1.81 billion going forward gets minimized. If you are interested into token unlocks for stack, again you can see the logarithmic nature of stack token unlock. Again, the inflection point is kind of getting over now. The new token releases would be kind of in a flatter trajectory. If we were to current price of analyze the current price of stacks, again 88 cents. If you look at the price from this view, again price was much higher in December at around $2.75. And if you take a quote of the price in April of 2024, the price at that point was about 4.5x higher than this current price. Again, $3.60 at that point in time. Again, right now the token is ranked number 57th by market cap. But if you take a analysis of what the price was in March of 2024, again 1 year 2 months ago, you can take that snapshot to see if there has been any growth in the market cap based ranking. Let's take 10th of March of 2024 as an example. This was the historical snapshot of how the crypto market looked back then. And if you check stacks, it was ranked number 33rd by market cap. Now the market cap based ranking for stacks has gone down by about 50% at about 57th spot. So need to see again right now the current rally, how it looks from technical level. This is the price color coded with respect to the risk level using 20-week simple moving average. Again, there was a bottom signal from February 2025 till about April 2025. Again back then we did make a couple of videos related to stacks on the channel. Again, this is a different crypto. Again, if you search over here, you can see over 2 weeks ago. And again, throughout the bear market, we have covered stacks on this channel. If you want to stay updated, you can click like or subscribe on this video. Again, the current technical level, again when we made this video back a couple of weeks ago, the price was compared close to about 50 cents. Now the price has come really close to the 20-week simple moving average, which is this red line, and the 21-week exponential moving average, which is this green line. You can see there's significant resistances at around 94 cents and 98 cents that the price has to contend with. Again, if it has to move up, or if for example over here the price did break down and retested it couple of times and then eventually went higher. Or over here you can see, historically speaking, these levels do act as some sort of a resistance or support depending on how the chart looks. So for example, in a bullish market, this in the bullish market, a rally or crash back to the 20-week or 21-week exponential moving average acts as a support, and then that provides some energy to the price action. In the bear market, though, again this level of resistance, these levels acts as a resistance. So let's see if the price do meaningfully close above that target. If they do again, if the risk levels were to right now again at around completely low at around 20 to 21%, if they were to go back to between this range for any meaningful rallies for stacks which occur between 30% risk and 100% risk, but you can again close out this loop to make it slightly more risk covers between 30% or 0.3 risk and 0.7 risk. If the prices were to go to that territory, per this model the price is forecasted between $1.60 and about $2.37. So from the current price of roughly 90 cents, that represents somewhere close to 2.5x of the current price per this model. If we were to look at the DC or the regression based model for stacks, this model again takes into consideration what is the fair value using this polynomial regression function and how the price is currently compared to the fair value. Right now the fair value comes at around $1.17. The price is lower than that. Again, the risk level per this model is at 8%, 9%. You can zoom it in to check. Right now it's at around 9%. If we were to highlight the sorry, not this one, the peak regression line, that's where again 2 standard deviation applied to this polynomial regression function. That dotted red line is where most of the actions, most of the major tops occur, again resolve at around $3.24 per this model. That again is confluent with that SMA based prediction as well, and the in the last market high at around $3.60. Again, if the prices were to go instead of that at risk level, if they were to go to between 50 to 70% risk level, the prices per this model could be at around $2.01 to about $2.75. So that is one major forecast for stack using this regression based analysis. The time weighted average price though is sharing a different outlook. Again, this model, whenever the price is below this blue line, which is the time weighted average price, typically for quality assets accumulating below the time weighted average price, historically speaking, has not been the worst idea. Again, you can see if there is a growth in the time weighted average price and the price action, which is the color coded region, you can see below the time weighted average price, this provides an accumulation range, not the actual bottom, but whenever this color is in purple shade like it is right now, looking back, it's not the worst time. Right now the price is at 86 cents, the time weighted average price is at 96 cents. So coming close to towards the end of the accumulation phase. Again, at one point the distance between the price and the time weighted average price again was 2x. Price was somewhere close to the 50 cents level, whereas the time weighted average price was close to $1 at that point in time. So if you were to zoom out and try to estimate what could be a bull run peak for stack using previous market data, the best guess that this model comes up with is this DCA model based peak regression line, and again slight extrapolation of that peak regression. If there is a lower high in the September time period, this could resolve the rally could resolve somewhere between $1.90 and $2. So that's one way to look at the projections using the regression based approach. Hope you enjoyed this content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.